I'm Tom, and a lot of people who use Robinhood want to learn how to use the app to generate passive income each month through dividend investing. And a dividend is basically means that you own a stock in a company, and if that company makes profit, some companies reinvest that back into growing the company. Some of them, though, pay a portion of that profit out to their shareholders, and that's a dividend. So it's a little bit of the company's profit that gets sent out to you if you own stock in that company. And it's something that's basically in addition to any gains you might have from the stock actually gaining value. You're actually getting some of the earnings that that company had. And people like dividends because they are a passive form of income. You don't have to do anything to earn that dividend. You just have to own the stock in the company. So Robinhood is a platform you can use for dividend investing by purchasing stocks that pay a dividend. Not all stocks do. A lot of companies don't pay a dividend if they're going to, again, roll that money back into the company and grow the company. But a lot of, especially more established companies, do pay dividends. And you can find companies that do. So let's go ahead and search in Robinhood here. Let's take a look here as I looked up before Coca-Cola, but let's look up a different one. Let's look up Church & Dwight. This is a really well-established company. They make a lot of consumer products, things like Arm & Hammer baking soda. And we can scroll down here. We can see they were founded in 1846, so they've been around quite a while. And what we're looking for here is not the price of the stock, which is about $102 per share, but we're looking at the dividend yield. It's in the lower right here, and it's 0.997. So basically, it's saying that for every share that I own, I'm going to get 99 cents each year of a dividend. So the yield is basically about a 1% yield that I'm going to get paid in terms of a dividend for owning that stock. So if I put $1,000 into it, then I would get about $10 per year in passive dividend income from that. So, that might appeal to you. It's probably a pretty solid company, but, it's not a huge amount. So the trick that a lot of people look for is, how can I find a stock that's going to have a pretty good dividend yield? So it's going to pay me more per year, but the company is going to be stable and able to actually keep paying the dividend. Because you can find companies that have a huge dividend, maybe a 10% dividend, but they probably can't sustain that for the long term, or the company itself might be so risky that you don't want to invest in it. And for sure, any individual stock can be risky. Even companies that pay a solid dividend and have done so for 100 years can go out of business. Things can happen that are unexpected, so there's always risks. But a lot of people look for well-established companies that pay a healthy dividend, certainly higher than that 1% we're seeing here. So that leads us to a list that people compile each year. That's often called the Dividend Aristocrats. These are companies that pay a high dividend and that have been doing so consistently for a long period of time. And some people draw different boundaries. They say it has to happen for 20 years or 10 years or whatever. But let's take a look at a company that's on a lot of those lists. AbbVie. This is a pharmaceutical company. Again, so it's certainly newer than Church & Dwight, founded in 2011. But let's go down and take a look. So the yield here is 3.39. So, over 3%, about 3.5% that you're going to get per year if you're invested in that stock. Again, in addition to any gains or losses that happen with the share price. So just for holding it, you're going to get paid about 3.4% or thereabouts. And this varies a little bit. There's different ways to calculate the yield based on the dividend now versus the dividend in the future, but fundamentally around 3.4% that's expected there. So again, with this, if I put $1,000 in here, I should make about $34 per year in passive income from this. So from that, you can start to figure out, okay, well, if I want to earn X amount of money per year passively from my dividends, then how much money do I need to put into stocks like these in order to get that level of passive income? So let's do a kind of a back of the envelope calculation with that. So let's say I want to earn $10,000 a year passively in dividend income, and I can look and say, okay, so $10,000, that's my goal for the year. And then I'm going to divide that by the yield. So I'm going to divide it by 0.03 396 in this case. That's the yield we've got there, percentage, and that's going to give me 294,464. So that's how much I would have to buy of AbbVie and hold in order to get $10,000 per year, given that 3.39 yield for the stock. So I'd need about almost $300,000 invested in that stock, and I'd get about $10,000 a year expected, not guaranteed, but expected of passive dividend income, and I wouldn't have to be working for it all to earn that. So you can see why it's appealing. If you have a larger amount of money to invest, that you can earn substantial revenue from this. This can be a good way for people to make some passive income, in addition to, again, hopefully the stock goes up over time and you make earnings from that too. So certainly if you had 300 grand, you could put it into one stock like that has a high yield. The challenge is then it's pretty risky because what if something happens with the stock you put it in, whether that's AbbVie or another one? You're not diversified at all. You might get that dividend, or if the company tanks, then you might end up losing a lot. So what people usually do is build a diversified portfolio looking for a variety of different companies that are going to pay a good dividend yield, usually working out to around 3 or 4% is the target people go for per year for their dividend income. And perhaps taking their portfolio and dividing it among 10 or more of these companies that maybe are dividend aristocrats or pay a higher dividend, but they feel good about the company after doing some research. Certainly, this is a strategy that if you're investing substantial amounts, especially, you should ask a professional advisor. There's also tax implications to dividend investing. It's not free money because often there are tax considerations. So definitely involve your advisors, especially if you're making a big investment. But you can see how you can start to figure, well, if I have $1 million to invest, then I could end up with almost $40,000 a year in passive income out of this, in addition to the gains I might see on the portfolio itself with dividend investing. And some things I like about Robinhood for this, makes it really straightforward. If you go to your message tab here, you can see as your shares earn a dividend exactly how much you got. You can choose to reinvest those dividends back into the stocks that generated them to hopefully cause that to grow over time, or you can have them distributed out to you. It adds to your buying power here, and you can invest that however you want to, or you can withdraw that money back out to your own bank account and then spend it on bills or spend it on whatever you want to spend your passive income on. So definitely if you're considering dividend investment and earning passive income with Robinhood and that strategy, certainly consult with advisors first, especially if you're investing a large amount. Know that there's a lot of risks involved there, but the strategy most people use is seek out some of these dividend aristocrats, companies that have paid a solid dividend, are expected to be fairly stable, or expected to continue to pay their dividend over time. Most people shoot for 3 to 4% as a reasonable long-term target for their dividend yield there. And then you can work backwards from that and say, okay, this is how much my portfolio will generate. This is how much I need in my portfolio to generate X amount of passive income per year. And then people make the investments accordingly. Again, decide whether you want to keep reinvesting, growing your portfolio, or if you want to distribute those funds out to your buying power here, and then ultimately transfer them back out to your bank and spend the money however you want. So that's an intro or a first look at dividend investing, passive income investing with Robinhood. It's a fun app to do that with, and certainly, it's a platform that you can use for that kind of passive income generation. If you found this helpful in any way, please subscribe to my channel. It really helps. I have a lot of Robinhood content here. Remember that this is not specific investment advice. You should always consult a professional advisor, and this video is for informational purposes only. But yeah, feel free to subscribe, and hope you'll follow me and see more of my Robinhood content.